Hey guys, Matt back with another video. This one on something that I haven't expected to cover, and I feel like I say that in almost every video. And I don't know, I just find these interesting posts on Wall Street bets that send me down these little rabbit holes that I enjoy learning about and enjoy sharing with you guys. So why are we looking at Warren Buffett's face right now? Well, as a kid, I always thought that owning Berkshire Hathaway or a stake in Berkshire Hathaway would be super cool and the ultimate sign of financial success, because Berkshire Hathaway Class A stock has always been incredibly high priced. Not that it wasn't worth that, but it was just out of the reach of most of Americans. And so with that, this play that I found on Wall Street Bets is actually a play on Class B stock, which is priced at a far more moderately $233 a share. However, this play is not on the common stock. It's actually an options play, which I normally don't do. I am not really an options type investor, simply because the risk is far higher. Most options contracts expire worthless, and I would be lying if I said I didn't have some options plays in the past that just completely lost some money on. And so I try to stay away from them. The only time I get in options is when it's a long call, a leap, so to speak. And what a leap or a long call is when you buy a call, which is a belief that the stock is going to go up in the future, but it's over a very long period of time. So for example, the only options I was holding prior to this play was BlackBerry at 2023. I had some January 2023 $5 calls that have been doing very, very well recently. And now I'm going to basically be sharing this Wall Street Bets post that talks about this leap play on Class B Berkshire Hathaway stock January 2022 calls at a 300 strike price. So let's just get into it. So here's the post, and I'm just going to read some of it so we can set the stage. Berkshire B has been neglected and left to die, currently trading near an all-time low on the most important valuation metric for the company, 1.19 times price to book value, despite the stock trading around $233 to $234 near all-time highs. What's that mean? Price to book value. You have price, which is the price of the stock, and then you have book value, which is the value of everything that the company has on its books. So in other words, you have an ETF, and the value of an ETF can very easily be determined by looking at all the underlying stocks that are carried within the ETF, and you multiply those stocks by the amount of shares, and then you can see that, all right, the ETF is worth a total of X amount divided by how many shares the ETF has outstanding, which gives you an overall price that the ETF should be priced at. A little bit different though for Berkshire Hathaway, and that's because Berkshire Hathaway doesn't just invest in stocks. Berkshire Hathaway has ownership stakes in companies like railways and many other companies. However, a large portion of its holdings are in Apple and Bank of America. 25% of Berkshire Hathaway Class B stock is invested in Apple, and 10% of Berkshire Hathaway Class B stock is invested in Bank of America, whereas the rest is divided amongst other stocks and companies and railway and all the other stuff that we were just talking about. So back to the point, the value of those stocks and those companies, as they go up, the book value goes up. But if the price of Berkshire Hathaway Class B stock doesn't go up, then the price to book value starts getting lower. And the reason this is what I believe a good play is because of that lowering price to book value. And right now it's estimated to be at 1.19. So continuing on in the article, Buffett has publicly stated that 1.2 times book is where he backs up the truck on buybacks. I'm convinced the stock sees a monster multiple re-rate very soon, with Q4 earnings expected the third Saturday in February. There's multiple things to unpack here, and the first I want to go into is Warren Buffett potentially doing a stock buyback on Class B. So if we take a look at this article, we can see here that in his 2015 annual letter, Buffett wrote, "Today, the large and growing unrecorded gains at our winners make it clear that Berkshire's intrinsic value far exceeds its book value. That's why we would be delighted to repurchase our shares should they sell as low as 120% of book value. At that level, purchases would instantly and meaningfully increase per share intrinsic value for Berkshire's continuing shareholders." So 1.2 of book value is the ratio in the past where when it dropped below that, Berkshire Hathaway bought shares of their own Class B and Class A stock. And what happens when a company buys back shares? Well, opposite of a dilution where you have more common stock issued and now the price of all the other common stock on the market goes down slightly in price. With a rebuyback, you basically take out of the pool some of the shares and now all the other shares are worth that much more. Going back to the article, as Apple and Bank of America go up 35% of total market cap, book value rises, and if Berk stock doesn't go up in lockstep, then the multiple gets cheaper. So basically what we were just talking about. And so as Apple and Bank of America have been going up in price, Berkshire Class B stock has not been keeping up. It's been steady trending up, but it's not keeping up, which is what's causing this price to book ratio to basically stoop down to historic low levels. The stock traded at 1.4 to 1.5 times book value right before the COVID crisis. That just goes to show what it was trading at prior to the pandemic, the kind of range that the price to book value stayed in. I expect us to get back to at least 1.4 times book, which all else equal would get us to around $275 per share. And that's assuming that by the time we get back to 1.4 times book, that the underlying assets haven't gone up in value, which could make it go up even more, because if those stocks keep going up, then it'll keep pushing this price to book value down. So until Berkshire Class B stock goes up and catches up, there's an opportunity here to capitalize on something that is seen as undervalued. So this post basically talks about the guy's position, and he says, I've taken a monster position in Berkshire Leaps. I am long the January 2022 300 strike calls and own close to 700 contracts. The IV is extremely low relative to the other strikes in the expiration set, which makes this even juicier given Vega is 0.5. So he's particularly honing in on these 300 strike calls as opposed to like 305 or 295. And that's simply just because of these Greeks that he's looking at. IV percentile is 4%, meaning volatility has been higher than it currently is 96% of the time over the past year. AKA volatility is pennies on the dollar, as is the underlying, which sets up an incredible time to buy this option. So not many people looking at this, not volatile, makes it really nice because once a volatile increases, you tend to be overpaying for these kind of options. So a couple things that I do want to go into. This depends on quite a few things. I see this as pretty safe in my opinion. And again, always do your own research, guys. I'm not a financial advisor, so please do your own due diligence. Please, take a second to look at all this, see if you're considering to get into this play. Consider, spending time on your own research and not just using this video. So with that, one thing that could happen to make this a great play is what we mentioned before, which is Warren Buffett doing a stock rebuyback. So if they buy back, it'll get a lot of attention, the value of the shares go up, and people will start buying back, which kind of creates this little feedback loop, which will shoot the price up. 2, Warren Buffett is sitting on $145 billion in cash. If they happen to do an acquisition of a company, usually it gains a lot of attention. With more attention, you get more volume, and with more volume, you can tend to see a price increase. And then 3, we can possibly see a stock re-rate. So looking at this Wall Street Journal analyst ratings page, we can see that currently two analysts have a buy rating, one analyst has an overweight, which means it's almost a buy rating for them, and 3 say hold. If we take a look at the price targets, we see that the current price is $233. The low price target is $233. The median is $248 and the high is $266.8. So the stock is currently at the absolute low rating that analysts have for this stock. That is why I feel this is safe. Now you can hedge your bet if you decide to get in this by buying some of the common stock and then just having some options on the side as well. I'm just going the options route on this. But those are the 3 things that I see, that if any one of those 3 things happen, if multiple analysts come out and re-rate, it's going to get even more attention from everybody, which to me would send the stock up all the more. So I think that Zero Sum Game 33 really found something pretty cool. They're very heavy in this. They bought 700 of those options, which is a pretty heavy position in my opinion. But this is something that could definitely take off in the next month perhaps, because by the end of February, it's expected that they're going to have their earnings, and that this is when everybody else is going to realize that this stock is incredibly undervalued right now. Or it could take several months based on, a potential buyback happening 3 to 4 months from now, potential acquisition further down the line. So this is by no means intended to be a short-term play, but it could play out that way. So if you do buy in, just make sure you're paying attention and that you're keeping track of what's going on with this. But I just wanted to share this with you guys, and hopefully you find it interesting. And if you consider getting in, let me know. Let's talk about it in the comments. You can also join my Discord channel where we can talk about it even further. But that's all I have for today, guys. So until next time, see you.